Welcome to Drumbeats, the must-listen-to podcast which explains why Indigenous partnerships are the key to securing successful outcomes in natural resource and infrastructure investment in Canada. I'm Mark Magnac and my co-host Robert Brantenauer, joined today by Adam Matthews, Chief Responsible Investment Officer at the Church of England's Pensions Board. Adam also chairs the Global Investor Commission on Mining 2030, a coalition of 125 institutional investors collectively managing $19 trillion in assets, who have come together to define what generally responsible investment in the mining sector looks like. In this conversation, you'll discover why mining is far more strategically important than most institutional portfolios suggest, what meaningful free, prior, and informed consent actually requires of investors, how to recognize when a company is going through the motions, and why Canada's Indigenous partnership model is attracting serious attention from the global institutional investment community.
Adam Matthews, the Chief Responsible Investment Officer of the Church of England's Pension Board. Welcome to Drumbeats. Thanks for joining us.
Thank you very much for having me. I'm really looking forward to it.
Yes, great to have you again. You just recently appeared at the 2026 Canadian Indigenous Investment Summit. And so some of our listeners will know you from that, but many of them weren't at the summit. And could you introduce yourself to our audience, please?
Absolutely. And well, first of all, it was tremendous to be at the summit. It was my first time and it was amazing energy, and I know we'll probably get onto some of that in the conversation, but it was a great event and I learned a huge amount. So thank you for having invited me. So in terms of my role, I'm the Chief Responsible Investment Officer for a UK pension fund, which is the Church of England. We serve clergy, 44,000 clergy, and our duty is to provide a pension over many decades. I think our youngest members are going to be taking pensions in the 2100s. So we come at life in quite a long-term investment time horizon. And in the context of that, we are invested in sectors like the mining sector. And we, again, take a very sort of long-term perspective in terms of the kind of way in which we want to see that as a responsible sector. We think there's lots of good practice and we think there's an important role for pension funds like us to play in helping shape that sector constructively. And alongside that, I lead various investor initiatives and I chair the Global Investor Commission on Mining 2030, which is 125 investors with $19 trillion in assets under management that have come together to really sort of work with industry, with governments, with key communities and drive the kind of future investment in the most responsible way possible. So I'll probably stop there if I've not gone on too long already.
Well, I wanted to ask Adam, what does a responsible investment officer, being chief of that, what does that entail and why that unique role at the pension board?
Yeah, there's a few of us at funds. There's not that many. There's probably about 7 or 8 other chief responsible investment officers. I'm the co-director of the investment team. So there's a chief investment officer and then there's my role. And between the two of us, we oversee the allocations that are made on the pension fund. I particularly have a responsibility to ensure that the teachings of the church, the ethical grounding of the fund is reflected in the way that we invest. Also ensuring that there's a real bridge to our members and that we understand their expectations. And obviously being a faith-based organisation, a lot of that is around how do we interpret the church's teachings into the practicality of the investments we make. And equally understanding that whilst to many of our members, the size of our fund, which is probably about $6 billion, sounds a lot to them, but in reality, you know that just gives us a small exposure to many industries and companies and sectors. And therefore, a part of our strategy is really to work with other asset owners, institutional investors to really ensure that there's very effective ways to address a lot of the challenges that we have when we look over the time horizons we've got, and that we can invest responsibly, make the returns we need to do, but at the same time try and shape responses to particular challenging issues, whether it's climate change, whether it's to the best practice norms, expectations we have in a sector like mining.
And you've been described as one of the architects of the net zero investment framework. Can you explain what that means in plain terms and why it matters to institutional investors who may not yet be using it?
Yes, that was a framework where we had a commitment to net zero as a fund, and we're very conscious that we could make a sort of a commitment. We could determine the rules around how we deliver that and do it credibly, but somebody else could make a similar commitment and approach it completely differently. And actually, the sum total of all these sort of individualized responses might not necessarily add up to the kind of response that you would be expecting when you're wanting to see finance constructively manage the risks posed by climate change and constructively contribute to achieving the kind of low carbon transition we need to see. So we felt the most effective thing to do would be to establish an initiative with other asset owners that really determined a set of rules around how you could do this responsibly, recognizing and acknowledging your core financial fiduciary duty, but what does it credibly mean to interpret net zero in a particular asset class, whether that's the way we invest in companies or in different investment products, or whether how we understand climate risks in the context of sovereign bonds or other asset classes. And so what does the best practice look like when trying to do this well and responsibly and in a consistent way across the industry? And so that was the impetus to create the net zero investment framework. And there's a large group of asset owners that are now actively using it. It's very practical. It's a tool. It's got a good degree of flexibility within it. It enables you as a fund to determine how you interpret that, but it really sets out the sort of the parameters to do that well and in a consistent fashion.
Was that the impetus for Climate Action 100 Plus, that you brought together this extraordinary coalition of investors, or did that come after? And could you talk a little bit about that?
So Climate Action 100 Plus is an initiative that all the sort of the global investor networks came around. A number of asset owners came together to really initiate it, recognizing that a lot of the exposure that we had, if you're sort of a large institutional investor, you'll have broad exposure to a lot of the sectors and industries that are exposed to climate risk. And we really needed an effective way to be able to talk with companies around how they're understanding that risk, managing that risk, and then really the ways in which we would hope that they can then be responsive to our expectations, that we need to see that they've got good management capabilities, good understanding, and good strategies. And so Climate Action was really focusing in on those sort of top. There's about 140 companies that are that really sort of would be a very significant percentage of most sort of listed equity portfolios that investors will have. So we were an early supporter of that initiative, and we took particular lead in engaging with certain companies and sectors, mining, oil and gas, and really it's been a very effective way for investors to individually come together. We've all got to make these decisions on our own individual terms. We're very clear that the only reason we do this is because it's in our fund members' interests to be addressing this risk, and actually to do it more effectively, we can do it as a sort of a collective voice. And yeah, we've seen demonstrable evidence of responsiveness from various companies in key sectors, particularly in the energy, electricity generation sector, auto sector. Some sectors have been more challenging. And the tool that tracks a lot of the sort of the judgment around whether companies are really sort of making progress is the Transition Pathway Initiative, which sits behind and tracks whether the company's got good governance of this issue, as well as projecting their future strategy in terms of the climate impacts of that against the different climate scenarios. So it's been an important initiative. I think with one area where it has needed to go further and it hasn't really done is connect this sort of dialogue with companies around how can we enable the financial flow into your company, into your sector, that's really needed to enable that transition. And we sort of need to take that conversation a bit further. And I think that's what Mining 2030 is trying to do with the mining sector. We know what good looks like. How do we unlock the finance to enable that investment to flow to the companies that are really trying to do the right thing and really helping drive that sort of level of kind of expectation?
Yes, and at the summit, you talked a lot about 2030 mining and the background to that and how that impacted and contributes to some of the discussions there. So I encourage everyone to go look at that content as well, because the audience was very interested in what you were speaking about and discussing, and it was very relevant. And I think it also demonstrates leadership from the Church of England to be driving that initiative.
No, well, thank you. I mean, we really think mining is a hugely important sector, and I think investors have taken a while to really appreciate the significance of the mining sector. And partly that's because often mining represents a very small percentage of a sort of a generically diversified portfolio like ours. Our actual exposure to mining is relatively small. However, it's also the sector that, as we know, unfortunately, when something goes wrong, the impacts can be very considerable on local communities, on the environment. And so therefore you sort of often are engaging with the sector because there's been a disaster or there's been something where it's not gone right. And as an investor in that company, you're sort of then engaging with that company or engaging with the sector because of it. And so we felt that there was a real need to not only sort of understand the sector better, but equally really understand the range of challenges, the importance of it, the economic significance of mining, but its relationship with all the other sectors. And when you look at it through the prism, rather than these are the mining holdings we've got and they represent X amount in our portfolio, but actually these are the sectors that are dependent on mining, then you actually look at this sector very differently. It is systemically important. It is much more strategically significant than most investors' direct investments would actually lend you to sort of believe. And so Mining 2030 was a way for us to be able to really understand the importance of the sector, that relevance, understand the challenges it faces, to really codify what we expect as good practice, because we know it exists. I've seen it in lots of mines I've visited, and then really sort of amplifying our role as an investor to support that best practice becoming the norm. And that's why we've set out an objective that all companies by 2035 are operating to the highest performance standards. How do we now drive that through the ways that we can sort of understand the progress companies can make, the investments we can make to enable that, etc. And how do you bring on those new mines that we need to meet future demand in the most responsible way possible? And so Mining 2030 is that vehicle to do that.
I'm curious, Adam, of your role as responsible investment officer and these various initiatives in your faith-based organization. How do you juggle, and are you mandated as a pension board to focus just on returns, or is it broader? Is your mandate broader to encompass social aspects or faith-based aspects? How do you juggle those interests?
Well, the starting point is we're a pension fund. Our core duty is to pay a pension. However, we're very conscious that it's also the way that we generate the returns to meet that financial obligation, and is also going to impact the world that our members live in and will retire into, and the communities that they live in themselves. And so therefore we hold those two things together. We don't see that they're in competition. We actually think that you can hold two things and really look at what does that practically mean in terms of the decisions we make around the way that we allocate our funds, the way that we incentivize our managers to make the returns we need, and the things that we say are important to us as a fund. We are very clearly an ethical pension fund. We are a faith-based investor, so we seek to interpret the teachings of the church into our investment portfolio. That means there's certain areas that we will not invest in, where we will intentionally restrict ourselves from receiving a financial benefit from being in that investment, because we feel that that's completely at odds with our members' interests, and we're able to do that as a faith-based fund. We also will make judgments where we feel that there are sectors or particular investments where, okay, there's some real challenges here. We've done the thinking, we've looked at the ethics, we've tried to interpret a good understanding of that. But then that gives us the ability to say, right, we're going in eyes open. we're not just going to sort of extract ourselves from that sector. We're actually recognizing that this sector is really important. We're going to be in here as an eyes open investor, driving best practice and working with other investors and the industry and governments and local communities to see the kind of path ahead that can actually envisage that sector changing in a way that we could then increase our investments. And so it's carrying that sort of dual understanding. We have to make that financial return, but we're conscious in the way that we do that it needs to be consistent with our members' interests. So we survey our members, we get a huge response rate, and there's very high level of member support for the approach that we take, and we make the returns. We are a well-funded pension fund in terms of meeting our obligations, and we've consistently made the returns over the years in excess of what we need to, and that puts us in a key position. So it's a real privilege to be able to have a role where you are looking at the complexities of carrying that duty and trying to understand. But it's also exciting because if you get this right, you can really be a catalyst for good outcomes.
I bet. Yeah, I'm an awesome responsibility to be responsible for the pension savings of 44,000, I think you said, members. Yeah, it's commendable what you've been able to achieve.
Yes. And if we come back to Canada, free, prior, and informed consent is a principle that Indigenous communities are asserting in major project decisions. It's recognized in the Constitution, UNDRIP. The Indigenous peoples of Canada have a different relationship now with the investment community because they're rights holders. So from an investment risk perspective, how do you evaluate whether a company has generally secured FIPC as opposed to going through the motions? Or is that something that you've seen in your dealings yet?
Well, look, I felt, for me, the conference, the summit in London was a hugely informative event just for me as an individual investor and my own personal sort of knowledge, and the opportunity to have exposure to the chiefs that I got to meet individually and have dinner with, but also hear the very practical experience of what consent actually means. And it was really interesting on the example where you had tech talking about one of their mines, and you had the different Indigenous groups represented by the different chiefs there present talking about what that experience was. And it was the consent. It wasn't that you got to a tick box of consent. Consent was something that you continually work towards. You can have agreement, and they will come to an agreement with the company in terms and talking and hearing how they talked about what that experience was, what genuine dialogue, respectful dialogue, acknowledging rights, and then the kind of structures you can put in place that sort of enables the practical play out of that was for me hugely insightful. And equally, seeing where it can work is so important, because I've seen a lot of places where it doesn't work, and where there's just simple power imbalances that, okay, we can acknowledge that there's right, we can acknowledge the principle of free, prior, and informed consent, but the practical application of that is that you've got such a huge power disparity between the parties that you're not going to get to the kind of place that I was seeing was possible, because the starting point was so far back, and the mindset of some companies might be ones where they're just trying to get that tick box agreement rather than that genuine dynamic of seeking consent, which builds a partnership and then an understanding and a way of structuring it in. So that for me was really a helpful learning and takeaway kind of set of things that I've relayed to lots of other investors since the summit. So how do we, so I've rambled a bit, but I've sort of like go back to the original point of your question in terms of how do we look at it? We're absolutely clear that there has to be consent, but we're also really cognizant of those challenges around doing it meaningfully. I'm really encouraged to see the kind of models that you are showcasing that Canada has developed. As I say, I'm conscious it's in a regulatory environment where there's a lot of structuring of of an understanding of what this practically means that there isn't in other places. And so therefore there needs to be some significant knowledge transfer of the learnings, and I suspect that the very difficult journeys that have been through to get to this point that Canada's currently in. And I'm sure it's not perfect everywhere as well. But I do really think that investors have got an important role to expect and reinforce these principles. We're building a tool called the Investor Mining Performance Framework. This is something that is explicitly for investors to enable us to understand how companies are delivering against best practice standards. We will be building in criteria around this explicitly into that tool. And that tool will inform us of the risks that companies are exposed to, the need to have really good practice policies, and it will hopefully differentiate those best practitioners. And we want to see that tool sitting above standard, so we're not duplicating, but reinforcing those expectations and principles, and then enabling us to link that to the way we understand risk, the way that we could determine that actually we can link that to an index, we can link that to debt products. And so I think that these are the kind of practical ways that we can be reinforcing these expectations. But I do see the model there that was sort of spoken to at the summit as one that was really sort of an encouraging one. And just the openness for the partnership from a lot of the chiefs that was being expressed, I thought was a very encouraging signal that we need to see more of.
A couple of points I'd like to comment on, because you mentioned the word power, which a lot of times people don't talk about in these relationships, and that balance of power in these areas has been addressed over time. And when people say, oh, Canada has that framework, a lot of time it seems, oh, look at what Canada has done. But I think an important point to recognize is the Indigenous people have been fighting for their rights since whenever the Europeans and anyone else arrived. And it's only now, through that consistent fighting, never giving up, that Canada has developed this framework, because it wasn't given to them. The Indigenous people, as Rob can attest, had to fight every step of the way for. But that shows it's a long battle. And as you've talked about your time horizon with the pension, as you're looking at generations 100 years from now, how it's going to be. And the Indigenous people have that same outlook, 7 generations. So today's battle is going to affect my descendants, and that's worth doing. So I thought that was really interesting that you touched on both those points, Adam.
Yeah, exactly. It's an interesting perspective you have, Adam, having insight into what other countries or communities are doing, and to remark that you don't see the same kind of leverage in other parts of the world. And Mark talks about the legal leverage that Indigenous people in Canada now have, having fought, as he said, for decades to achieve, to get to a point where the highest court in the land have defined more clearly what our constitutional rights are and what some of the treaty rights mean, and inherent rights. And so we get to a point today where there's real legal leverage, but we also now have examples, success stories, and so commercial leverage, because business is starting to recognize the advantages of this kind of framework and meaningful involvement with Indigenous people. And when you talk about looking for consent, I guess the ultimate form of consent would be equity participation and buying into a project. And so Indigenous people in Canada, more and more, and you would have heard this at the summit too, taking equity stakes in projects. And what does that mean for an investor considering coming into a project like that?
Well, I mean, first thing, just to say, Mark, Robert, I completely acknowledge that this hasn't happened without quite considerable fight that you've alluded to, that people have had to fight for their rights, and it's now got to a point where there is that establishment. But I'm sure that there's still an ongoing continued it's something that will just be continuous effort, but it's obviously in a much better place than it was. And clearly the history of that is one where there's obviously a huge amount of things that should never have happened that have happened, and it's been unfortunate that it's taken so long. But the path ahead is a really exciting one. And when you look at those kind of time horizons and what you can think in terms of the partnerships that are now being put in place, those equity stakes, the potential of growth, those what that's going to look like in time, I just think that there's a really sort of interesting, exciting sort of set of dimensions there. And from my perspective, we're obviously coming in from a sort of a perspective where we have exposures in lots of different jurisdictions. It's absolutely clear to us there has to be that underpinning respect for the jurisdiction expectations, and that particularly underpins where you've got Indigenous communities respectful of the rights, and then finding what that practically means in those partnerships. And if that's manifested itself in equity stakes, equally, I did hear from some of the others in terms of the ways that some of this was sort of manifesting itself in different dynamics as well. I think, but that's obviously to be determined by those peoples in dialogue with companies that are equipped with the capability to come at this with the right mindset to be able to seek those partnerships, and to really make them work. So I sort of feel that for me is companies that can do that well. It's an attractive proposition, and we just see that as a broad part of the kind of partnerships that can evolve. So I think it's a very positive thing that you're in London, signaling that to a wider investor community of the opportunities that are emerging and in Canada, and the particular partnership model that you're evolving here. So yeah, it's yeah, as I say, I'm genuinely impressed and feel that I am learning a lot. But I do hold in my mind that there are places that I visit where you don't see this, and you know that there's a long fight and a long path for certain communities still to go on, and it's sad to see that. Obviously investors can be a positive encouragement of, actually, look, our expectations are that this needs to be modelled much more on what we're seeing in the likes of Canada. Then I think that's the kind of constructive way that we can sort of pursue that.
We're hopeful that it'll be, the structure we're using will be one of the next great exports from Canada, and even places where there may not be the constitutional or legal rights or the legal leverage, that there'll be commercial advantages will be clear to all, and that some of these frameworks will be adopted.
Alongside the export of your pension funds, they are, your national, all your very large Canadian pension funds are clearly part of the strategy as well. And I think Canada's got a better understanding of the role of pension funds in its economy than I would venture many other countries do. So yeah, we have a
Well, the Maple 8 will be pleased to hear that of their leading role. And of course, though, they talk about their fiduciary duty, as you have, but you also said it's not just about the return, it's about the world our pensioners are going to live in down the road. So I think there is a lot of learnings. But do you think the perspective of Canada to the investment community, individuals and organizations such as yourself, is changing as the world has changed? Are people taking another look at Canada?
Well, yes, absolutely. I mean, just going back to your earlier point around, I mean, one of the things that does frustrate me is the sort of the belief that finance operates in a vacuum of values and responsibilities. It's a human construct. It's not an alien imposition that means that the wider common good of society needs to be served. That's why it's there. We've constructed it to be effective and efficient and in managing capital, and it needs to serve societal goals, and therefore where it's having really negative consequences, that needs to be addressed. And I think if you take it a long-term perspective, it's in our interest to do that. So I do sometimes feel we're driven by the short-termism that often incentivizes the worst behaviors, and therefore you do need to be proactively working with governments on what good regulation is, and with peer investors to ensure that you're incentivizing that long-termism, particularly when you've got the time horizons that we have. And pension funds therefore have a really important role in that context. And therefore, where do we, how do you look at Canada? I mean, look, we're in a very challenging global geopolitical environment at the moment. We're all cognizant. I don't need to say to you, we're all watching the news. We're seeing more conflict now than there has been since the Second World War. So we track all the conflicts around the world. There are more now recorded formally, but then there's underneath that, there's lots of other, that sort of state level. There's underneath that, there's a lot more sort of conflicts. A lot of the global institutions that previously have been operating this place are fracturing or have been weakened. And a lot of the traditional alliances that have served some parts of the world well are breaking down as well. And so you're in a very volatile geopolitical context. And into that space, I think Canada's actually stepped and offered part of the vision of what does the sort of the future path look like, that doesn't necessarily accept that we are going to have a bit more of a free for all and the biggest person in the room gets whatever they want. No, we're still wanting to have a world where there are rules, where there are principles of fairness, and that there's actually a really important role for countries like Canada working in partnership with other middle powers to really sort of look at that rules based kind of vision that actually could be fairer than some of the things before. So when I talk to colleagues in Brazil or South Africa, and you look at the rules based system that we're worried is sort of fracturing, well, they're part of the rules based system, but it's not a rules based system that's necessarily always worked in their favour. And so, is there an opportunity here that a grouping of countries can emerge with a sense of to still want to be operating by rules, but actually we're going to have slightly fairer rules? Some of the benefits in mining are going to be realized much more closer to home than actually just having raw product exported and value added elsewhere. We're going to be generating a vision where there's an acceptance and an understanding, closer value generation in country where that has the resource. The benefit being that we're also doing that to the high standards and securing supply chains into the likes of Europe or the UK or elsewhere. And so I sort of feel that what Canada's presenting is a way for us to begin to navigate and put the partnerships in place that do want to operate by rules, that do want to see that sort of fairness. But it's going to require us to work very differently. And I think pension funds in that context are going to be hugely important. And it was really interesting after Mark Carney's speech at Davos, where he had that very sort of blistering diagnosis of the fracturing that's occurring. And then when he went on to the solutions part, the first paragraph of that solutions part had Canada's pension funds. So it's institutionally locked in his mindset of the role the private finance can play, but also the minerals that Canada has and the opportunity there. So I think there's a really exciting, albeit challenging because of the dynamics that we're operating in globally, environment that people are looking at Canada. I know as a fund, we're looking at what does that practical outplay of that sort of middle powers alliance in effect starting to work together on minerals. How do we get the kind of investment into the mines that we need to meet the demands of the likes of Europe and UK, etc., and do it to the best standards possible with the consent of Indigenous peoples and the kind of structures that we've been talking about, and how do we put that long-termism as the driver of it? So I think we're into the practical stage of let's be getting into dialogues around making that happen, and in that context I think Canada's got a huge amount to offer.
I think you've answered this question maybe a couple times, but I'll ask it a different way. Adam, the move in the US in particular to get away from anything that might be considered sustainable and to roll back a lot of the initiatives, has that had an impact in Europe? Has that made you change your investment thesis at all? I know you're long-term thinkers, but what impact has that had? There seems to be still quite an active sustainable investment community in Europe.
Yeah, I mean, look, there's always going to be a pushback when certain trends start to really take off, and so now you've got a pushback on ESG, environment, social, and governance, and on responsible investment, and so there is a portion of certain industries or certain sections of society that are feeling that this is a threat to how they've done their business and how they have benefited, and so you've got a pushback. That's inevitable. Does that pushback mean that you unwind everything that's gone before? No. I also think that there's certain trains that have left the station, to use the analogy. I mean, climate change, okay, you can have a government that doesn't view it as a priority and is seeking to use its position to sort of unwind their commitments. But fundamentally, a lot of the industries we're engaged with, a lot of the sectors that we have exposure to, there's a trajectory of transition taking place. Now, it might be slowed down, but the train's left. The train just does the train get to the destination on the original timeline, or is it slightly reduced? I mean, it's moving, and so we're not seeing a pullback in certain sectors, and equally other parts of the world are regulating to those expectations around the low carbon transition. And industries responding to that and if you're coming in if you're an international entity, why are you going to start having sort of differentiated production for it? Ultimately, you're going to sort of be moving into those larger markets that are starting to sort of regulate. So my sense is that there's still a very significant constituency of investors in the US that are very clearly committed. They see the risk of issues like climate, on the need to embed sustainability, on the importance of long-termism. So we're still very actively in dialogue with a lot of those. I think that there is a significant pushback in certain areas, and that's just something that we need to understand. And I also think we've got to get much more effective around the way that we actually look at how we invest, where that impact is felt, where are there the kind of alliances of investors that really want to sort of have greater impact through their investments, and finding that sort of common ground. So and in Europe and in the UK, there's still a very strong level of commitment, because ultimately we feel that that's the most effective way to manage our responsibilities and our duties, and meet those pension liability returns that we've got to meet, and ensure that that impact is felt positively by our beneficiaries.
Well summarized. Thank you, Adam. Robert, is there anything else you'd like to ask at the moment?
No, that was very, very good and very interesting, Adam. Thanks for the time. Anything from your perspective that you would like to touch on?
Not at all. I feel we've covered a wide waterfront, and hopefully that is of interest to your listeners. But I've really appreciated the engagement as well. So thank you.
Well, Adam Matthews, Chief Responsible Investment Officer of the Church of England's Pensions Board, thanks very much for your time at the summit and then today on Drumbeats. Really appreciate it.
Thank you very much. Really appreciate being invited to join the podcast and to have spoken at the summit, and look forward to future discussions.
Thank you very much, Adam. It's been great to have you on the podcast and at the summit. We look forward to speaking to you in the future. Thank you to Adam Matthews for sharing his insights with us, and thank you for viewing and listening. Be sure to share, subscribe, and leave a review on your favorite podcast channel. Thanks for listening to Drumbeats. Until next time.